If we look to last week, we had the US jobs data coming in better than expected, really positive for the markets and the US economy.
Good morning, Mashudu. Yes, the numbers were much better than expected. We saw that payrolls increased by 163,000 against expectations of 100,000 in July. And we saw that manufacturing and the services sector created jobs during the month of July. And I think the number really eased fears that the US will slide into a double-dip recession. And however, when we look into our numbers and with the fact that there's still fiscal cliff looming in the US, we are still expecting a 50-50 chance of a recession there.
We did have the Fed disappointing the market last week with no stimulus moves. When does Standard Bank perhaps expect the Fed to perhaps move on more stimulus for the economy?
Yes, I mean there are still the risk that there will be a stimulus in the economy, and also we still have a lot of numbers coming in, and I think that those numbers will inform our expectations going forward.
We had a number of data points out last week here in South Africa, vehicle sales and PMI. We've got manufacturing and mining this week. Manufacturing seen coming at 2.2% in the month of July. Your expectations for manufacturing?
We're expecting manufacturing to moderate a bit to 2.6% year on year, from 3.1% year on year in May. And just looking at the numbers, we believe that the numbers are likely to continue to slow down, especially given the fact that the global economy is still quite low, and also the PMIs from South Africa's main trading partners are also still quite low, with PMIs around below the 50 threshold level, which means that they are expecting manufacturing sector in those countries to actually contract. So really, when we look forward, we're expecting that there's still downside risk to South Africa's manufacturing sector.
Another large sector is the mining sector. Your thoughts on the current numbers we could perhaps see coming out of the mining sector?
With the mining sector, we don't have a forecast and there's no consensus there, but we know that in the month of May, we had the mining production actually increasing to 0.8% year on year. We are expecting a slight increase in mining sector, or in the mining production. And again, also same as with the manufacturing sector, we believe that there's still downside risk, especially given the fact that we have global slowdown, while the mining sector is also having their own risks, such as inadequate infrastructure and high input costs such as labor and electricity costs. So there are still also downside risks remaining in the mining sector.
What type of impact could these numbers have on the rand? We did see it trading at around levels of about 8.40, 8.37 in last week's trading session, but has strengthened somewhat, sitting at 8.15, 8.14 this morning.
I think with the numbers, if they come out worse than expected, especially the mining and the manufacturing sector, we can see the rand losing some ground there. But I think just for this week, we think that the rand will continue to take its cue from international developments.